Happy Monday, everybody. This is Sean McCartney with eXp Realty, sitting alongside Pam Aberashed from Summit Funding. And this is the newest episode of the Monday Home and Mortgage Mashup. If you are watching on Facebook, if you would not mind clicking the like button below, and if you are watching on YouTube, if you would hit the subscribe button, and please also hit the bell so that you're notified the next time that we post a video, which is going to be every Monday between 12 and 1 p.m. So thank you very much for that. We appreciate your fandom. Today's topic is going to be credit. As a real estate agent, I recommend to every one of my clients that they be sure and get together with a lender before they go out and look at a home and determine what their purchasing power is. And what that is the number that you feel the most comfortable with in terms of your current bills, so that when you move into your new home, you can be comfortable paying all your bills, including your mortgage, and you're not house poor, meaning that you have to adjust your lifestyle in a manner in which you weren't prepared to do so in order to live in your home comfortably. So three things go into determining that purchasing power. The first one is your income. The second one is your debt to income ratio. And the third one is your credit. And a lot of times people will tell me, well, Sean, I think my credit's probably too low. I may not be in a position to where I can buy now. Or Sean, hey, I checked my credit score a year ago and it looked good, so yeah, I'm sure I'm fine. Or three, yes, I know what my credit score is and I'm above a 700. I think I pay all my bills on time. It should look great. Well, the best way to determine where you sit in those different tiers, so to speak, is to get together with a lender like Pam or with a lender of your choosing and let them discuss with you what you can do, what you look like, and what you can help to improve your situation. And so with that said, I'm going to pass it off to Pam and let her tell you what a lender can do for you.
Thanks. So yeah, we as lenders are not 100% credit experts, but we certainly do know quite a bit about credit, more so than the general population. So if you have any credit issues, most of the time it's something that we can help you figure out how to get around. If your credit score is too low, we can give you some guidance to help boost your score and get it higher to where it needs to be to meet the guidelines. And then if your credit score is higher, that kind of opens up the doors for a lot of other loan programs. So the higher your credit score, typically, generally speaking, the lower your interest rate is going to be. The different loan programs open up a lot more opportunities for your buying power. And there are certain things that you may not know to look for on your credit report. So there might be some late payments. I see a lot of times people with 700, 750 credit scores have medical collections they didn't know about. So even if you are confident in what your score is, there are certain things that you may not know are on your credit report that you want to get addressed before you go into the home buying process. It's also nice to know if there are any late payments or any other bad reporting going on from different credit lines. So for example, I just had somebody who refinanced their home with another mortgage company, and because of that refinance, the other company reported a late payment, even though we had proof that it was not a late payment. So that dropped this person's score quite significantly. We were able to get rid of that late payment and boost her score back up. So that's where a lender is really important for you to go and talk to them and make sure that everything looks good on your credit report, get pre-approved, find out what your purchasing power is so that Sean can take you out and look at homes and you can go ahead and make an offer.
And I can tell you, again, just real quickly as a realtor, on my side of it, it is always best that you go ahead and determine that purchasing power beforehand, because the worst thing you can do as a buyer is go out, find a home that you absolutely fall in love with, then go to the lender, find out that for whatever reason, this is not the time to be doing this, and then it taints the entire process going forward. You never find that home that's as great as the one that you found the first time. So always better to know your situation before you go out. It makes my job so much easier to be able to find the home that you're going to love, and it makes it so much easier for you to find the home that is going to fit what you're looking for, both from a lifestyle standpoint and from a financial standpoint. So anyway, thank you very much for tuning in. Check us out next Monday. And again, remember to hit that like button on the Facebook or hit subscribe on YouTube. And we thank you very much.
Thanks, guys. See you next week.